Assalamu alaikum wa rahmatullahi wa barakatuh. Peace be upon you all. Thank you so much for joining our webinar tonight, where we are going to be taking you through the home buying journey with Pfida, as well as our range of products and services. We're also going to tell you some of the benefits of the investment window that is opening soon as well, inshallah. And we're going to take you through all of it and answer all of your questions live on air, inshallah. So brief format for the day. We are going to, inshallah, take you through a short deck. We will try and make up for lost time because we have started a bit late owing to the technical difficulties and press. We're going to take you through a deck where we will talk through our home buying product, the journey, the application process, as well as talking through our savings and investments products at a very high level. So Pfida does offer savings products as well. But bearing in mind our savings products are investment-related products, they aren't suitable for everybody, so they are subject to eligibility. So when you navigate to the savings page on our website, you will see it asks you what type of investor you are before it allows you to proceed. And that's to align with our regulatory responsibilities. It's very important that we aren't promoting investment products to people that they may not be suitable for. So we'll tell you a little bit about that process as well, what that means, how you can get certified to take part in the investment round if that's of interest to you, how you can get certified to view our investment products and participate in those as well, inshallah, if that's of interest to you. We'll cover all of that in the webinar. First of all, we're going to get straight into it, inshallah. And as I say, we are going to try and make up a little bit for lost time. So a little bit about us, myself, Raza Ullah. I'm the CEO and founder of Pfida. To my right is Sheikh Salman Hasan, our chief legal officer, my co-founder, and our head of Shariah. Myself, I'm an actuary by background with over 19 years of industry experience. I've worked for the likes of PwC, Lloyd's of London Marketplace, the Bank of England, and back in 2015, I had a life-changing experience when Allah called me to Hajj. And during the course of Hajj, I remember standing on the plains of Arafah with my hands raised to the sky. It was a 50-degree heat day. I was standing under the shade of a lonely tree with my feet in the sand. And I remember having a conversation with Allah and saying, "Oh Allah, Ya Rabb, you have given me everything I could possibly ask for, my health, my wealth, my iman, my intellect, and this actuarial skill set, which is not that common." And many of you may not have even heard of what an actuary is. An actuary is a complex statistical modeler. We specialize in risk modeling and risk management. So I said, "Ya Allah, you've given me everything I could possibly ask for. What will I say to you on that day when you ask me what I did with it all?" I remember at that point in time, the only answer I had was, "Ya Allah, I bought a nice car and a nice house, and I lived for myself and I lived for my family." And I remember thinking, will my Lord be pleased with that answer? And I remember being very afraid. I remember thinking, I don't think Allah's going to be satisfied with that answer. And I remember trembling and crying like I've never trembled and cried in my life. And it is no exaggeration to say that there was literally a puddle around my feet from the tears I was shedding. I don't think I've ever cried like that before, and I don't think I'll ever cry like that again, because I was so terrified of my Rabb on that day. I was so terrified of not having a good answer. And that was the moment that changed my whole outlook on life. And I decided that I wanted to be able to at least say, "Ya Rabb, I tried. I tried to do something to please you. I tried to do something to serve humanity with the countless blessings you've given me. And I tried to do something to serve your ummah with the countless blessings that you've given me. And perhaps in Allah's mercy, that would be sufficient." So I came back from Hajj. I ended my role at the Bank of England, and I immediately went about setting up this business that we have today, Pfida. And as I started going through that process, I realized because it's a halal home buying product, I realized I'm not a scholar in Sharia, and I needed a scholar who is well versed in both Sharia as well as English law. And so I started asking around my contacts and networks for somebody who's well versed in both English law as well as Sharia. A good friend of mine at the Bank of England, who was leading the Islamic finance team at the time, he said, "You should speak to Sheikh Badr Hasan." I didn't know who Badr Hasan was at the time because I knew him as Salman Hasan. So I said, "Who's this Badr Hasan? Please put me in touch with him. Let's have a phone call." And so he arranged a phone call, and I'll let Sheikh Salman take over from there, inshallah.
Bismillah wa salatu wassalamu ala rasulillah. I'm Salman Hasan. I'm the chief legal officer here. I'm also in charge of Sharia. So I take care of internal Sharia compliance. We also have Sharia certification from an external body, the Islamic Finance Advisory Body. So we have both internal and external Sharia governance. Now, my background is that I trained as a lawyer specializing in Islamic finance here in London, but also out in Dubai and across the Middle East. That sort of brought together my knowledge of both English law and Sharia law, because after graduating from English law, I went to Damascus and studied, effectively did a second degree in Sharia. Now, while I was studying out there, I used to come back to London during the summer holidays and teach Arabic courses in the summer. And Raza, back in 2005, I believe, was one of my Arabic students. And then we parted ways, and 10 years later, after he'd become a seasoned actuary, and I'd qualified and I was practicing Islamic banking and finance. In fact, I'd also left my job because I was disillusioned and dissatisfied with the sort of current practice of taking conventional interest-bearing financial contracts and reverse engineering them to make them Islamic. I just didn't feel that embodied the spirit and the purpose of the Sharia. And I felt a lot of moral compunction about that, practicing that. But I'd also left my job and I was just sort of temping and contracting. And then Raza contacted me and said, he's left his job at the Bank of England. So we have sort of parallel in our stories. And he's setting up something visionary. He wants to set up an Islamic home finance company that's built from the ground up, based on Sharia principles, not based on compromise, not based on reverse engineering and creating sort of complex forms of debt with Islamic sort of contracts. So I was very enthused by that, and I said that's my dream. I'd love to do that. And so the two of us got together, and the rest is history. And I'll let Raza carry on from there.
So you know a little bit about us and our backgrounds. About Pfida, for any of you who have only just come across us recently, we do provide a halal home buying solution, primarily aimed at Muslims, but really aimed at anybody who doesn't want to take on a debt-based mortgage, who doesn't want to deal with riba, whether it be for religious or for moral reasons. We also provide halal savings and investment accounts as well. And what we're going to do next is we're going to take you through the home buying product, how it works, the journey, the process, some of the fiqh principles Sheikh Salman's going to talk you through. And then, inshallah, we'll take you through the investment side of things as well at a very high level, bird's eye view. We won't go into too much detail because, again, we have to make sure that we're only, really talking about the details of our investment products with people who are eligible for those for regulatory reasons. But if you are interested, you will have seen the QR code before, and we'll show that QR code again a bit later. When you scan that, it takes you and it asks you to declare your investor type. And assuming you're eligible, then it lets you find out more about our investment products as well, inshallah. So without further ado, we're going to get into the home buying product, and Sheikh Salman is going to talk us through some of the fiqh aspects, inshallah.
Right. So as I said at the beginning, we pride ourselves, we're very proud in a positive way, in a good way, that we've built Pfida from the ground up based on Sharia principles. I'm going to, at a very high level, set out some of those key principles that underline really all Sharia investments. But in particular, how you would structure an Islamic home finance product based on Sharia principles. One of the overarching principles of Sharia is actually based on a hadith, a statement of the Prophet Muhammad, peace be upon him, sallallahu alayhi wasallam, in which he says, al-kharaju bid-daman, al-kharaj bid-daman. Now, the word kharaj in Arabic means the return that you get from an investment or an asset. It's called kharaj. And daman means the liability or the risk that you have in that activity or that asset. And so what the Prophet ﷺ is really saying is that your right to get a return from an investment or an asset is also a type of investment, let's just call it investment, is based on the fact that you've taken risk in it. And so the reverse is also true. If you haven't taken risk in that, then you're also not entitled to take a return from it. Now here I want to distinguish between business risk or commercial or asset risk and credit risk. Because credit risk is also a type of risk. Credit risk is where you lend somebody money and there's a risk that they can't or won't pay you back. And what Islamic law says is where you've lent somebody money and they owe you a debt, they owe you that money back in a month's time, in a year's time, as a debt, then you're taking on their credit risk. You're not allowed to take anything more than the principal capital amount back. Because if you do, that's riba. In English, we call that interest. So credit risk does not entitle you to a return. Commercial risk is actually highly encouraged, does entitle you to a return. And this is called al-kharaju bid-daman. Now, let me give you a scenario. Suppose you go to an Islamic, or you just go to a bank. You want to buy a house. The sale price is £100,000. You've got £20,000. You need another £80,000. You go into a high street bank and you say, I need £80,000 to buy my house. They'll say, we'll lend you that money and we'll charge you interest. And you say, well, I'm not interested in that. I want something that's Islamic, that's consistent and compliant with my faith. And then you go to an Islamic bank. Now, an Islamic bank will say to you, we can't lend you that money and charge you for that because that's interest, that's riba. But we could enter into a co-ownership with you. We could buy that house together as partners. So they'll put in 80K, you put in 20K. On day one, you own it, 80% to the bank, 20% to you. So far, so good. No problem with that. What the bank will then do is they'll say, you must buy our share from us for exactly £80,000, and we'll give you some time to pay that. So we'll give you what we call credit. So you have an obligation to buy that, but that obligation is a credit obligation, which is you will buy that and pay for it on a monthly basis over 20, 25, 30 years. So now you owe the bank £80,000 payable in credit over time. Again, so far, so good. If that's all the bank did, that would be a dream come true. That would be effectively like an interest-bearing loan in terms of its financial outcome. The issue here is, and this is the issue that some scholars, actually many scholars, have raised with the Islamic banking model, and the issue that gave me discomfort when I was practicing it at the law firm. The issue is, until you've paid off that credit, what the bank says is, you must rent the property. Because you're living in it, you must pay us rent on a monthly basis until you've paid off that credit, until you've effectively bought off the whole of the property from us. Now, of course, you have an issue here because you have an obligation to buy that. And so you literally owe them the 80K, regardless of what happens to the house. They've passed on the risk of the house to you, the customer. So now going back to that first principle, they're not taking risk in the asset anymore. All that risk is on you. But now through this mechanism, they're taking a rent on top of the debt that you owe them. And that's the issue. And many of us will think, well, hang on, how can you charge rent on a debt? What's rent on money? And rent on money is, of course, often called interest. And see, that's the issue here. So sometimes, although it might look like rent, if you look at the mechanics of it, it's sometimes said that this is a way of reverse engineering the economic outcome of an interest-bearing loan using the combination of a co-ownership, a partnership, plus a sale. One partner sells their share to the other, plus a lease. So you see, so there's the second two contracts, the sale contract, where you're obligated to buy the bank's share, and the lease contract, where you're obligated to lease the bank's share off of them on a monthly basis and pay rent. Those two in Arabic are called bay'ah, or a sale contract. They're contracts of exchange. And in fact, there's a very famous statement of the Prophet ﷺ in which he forbade bay'ataini fi bay'ah. He forbade the combination of two contracts of sale in one. And the reason for that is you can combine two contracts of sale in one to give you the economic effect of an interest-bearing loan. And that's the third principle that I've highlighted on my slide here, which is the prohibition of two sale contracts in one. So that in a nutshell is a very high-level overview of the key principles of Islamic finance that inform both the Islamic banking model, but also our model, and the Pfida model Raza's going to explain in a bit, which is we don't actually have that debt element. And Raza will explain that when he explains our product.
Thank you very much, Sheikh Salman. I can see absolutely loads of you filtering in now. Thank you so much. I know we started a bit late. We had some technical difficulties. MashaAllah, alhamdulillah, we've had over 700 people register for this webinar tonight, and I can see now that Maghrib prayers are done. There's absolutely loads of you filtering in. Reminder that this is a live stream, so if you missed the beginning while you were praying, you can rewind a bit. But we did start just after Maghrib prayers, so you shouldn't have missed too much, inshallah. So do make use of that live stream functionality if you need to. Okay, so now we're going to go through how our model works very briefly, and then the home buying journey with Pfida as well. And there is a Q&A function as well. Do feel free to put your questions in there. We've got the team in the background starting to answer some of those, and we'll make sure we save plenty of time at the end to answer as many live as we can as possible, inshallah. So the Pfida home buying model is actually surprisingly simple, right? And it's very, very different from a mortgage. So unlike a mortgage where the bank lends you money and you have to pay that money back with interest, our model is actually much more akin to a landlord and tenant relationship. So imagine you're renting a property from a landlord, right? Now we know inherently when you rent a property from a landlord, there's absolutely nothing wrong with that. That is an absolutely halal contract. We also know that when you're renting from your landlord, you can go to your landlord anytime and you can say, Mr. Landlord, I really like this property. Can I buy it from you? And the landlord might say, yeah, sure, you're welcome to buy the property from me. And we know inherently that if this situation occurs, we know inherently this is absolutely halal. There's absolutely nothing wrong with this. This is completely normal. And inherently, you don't need to be a scholar to know that this situation is absolutely halal. And actually, the way our model works is exactly that. So the way our model works is, effectively, we have a landlord and tenant relationship, or something resembling a landlord and tenant relationship. And the reason I say that will become clear in just a minute, because we're moving to a co-ownership agreement. But let's take the landlord and tenant relationship. So your only obligation to us is to pay rent on our share of the property. Now, normally with a landlord, the landlord would own 100% and you would own nothing, and you would pay rent on the full property value. With us, we are partners. So rather than us owning 100% of the property, let's say if it's a £100,000 property and you've contributed 20,000 towards it and we've contributed 80,000 towards it, then we are 80-20 partners, and you'll pay rent on our 80% share. So what does that mean? If the rent for that property would normally be £1,000 per month, your rent will be £800 per month. And that's just the fair rent to pay for that property. Now, I can see already in the Q&A, someone's asking, do we peg to Bank of England base rates? And the answer is no. The way we set our rent is we look at the local property market for that property, and we try and come up with a rental range. And it's not an exact science, and it will be very different in different areas, how much data there is. But we try and come up with a reasonable rental range. And we try and come up with a low estimate, a medium estimate, and a high estimate. And we look at that range, and our goal is to try and set the rent within that reasonable market range. Now, sometimes we may end up at the lower end, sometimes we may end up at the middle, sometimes we may end up at the higher end. And sometimes we may say, right, for this to work for us, because we have to make money on this, right? And it costs us money to raise money in the background to be able to fund homes. So sometimes we may have a situation where we say, for this deal to make sense for us to enter this partnership with you, we have to charge you a rent that may be even slightly higher than the market range. We try to avoid that where we can, but sometimes we will have to do that in order to make it viable for both partners. And then, of course, it's up to you if you're willing to pay that or not. But what we do is we also look at what other providers in the market are charging. And what our aim is to make sure that we're at least competitive with other providers, whilst also trying to fit within that reasonable rental range. Now, so you will pay rent on our share of the property. Now, you have no obligation other than to pay rent on our share, which is exactly the same as renting from a landlord, but you're only paying rent on the share that you don't already own. Now, you have the option anytime to buy equity from us. So just like going to your landlord and saying, Mr. Landlord, I would like to buy your home from you. With the landlord, you would have to buy the whole property at once. With us, we say, okay, you can buy it in chunks, any amount you like, anytime you like. And we facilitate this through our wonderful app. It's a web app, which if you scan that QR code, which was on screen earlier, and we'll show it again later, it takes you to the web app. If you don't already have an account, you can just register for an account at the bottom there. And when you become a home buyer with us, you get access to the home buying dashboard. And through this dashboard, you get to see all the metrics to do with your home buying agreement, how much your monthly payment is split by rent and your target level of equity purchase, your future payment estimates, all broken down very nicely for you. And you can even make changes to your payments from this. So literally from our app, from month to month, you can choose how much equity you would like to purchase. You can choose just to pay your rent, that's your only obligation. Or you can say, actually, I want to get to full home ownership. We know our customers are coming to us to own their property, not just to rent a property. And so you can go into your dashboard literally from month to month and choose how much you want to pay, whether it be rent only or rent plus a slice of equity. Now, what we do is we incentivize you because we want you to get to full home ownership. And so if you come to us at the start and say, I'd like to fully own my home after 20 years, we will calculate how much equity you would need to purchase every month so that after 20 years, you've completely bought our share and you fully own the home. And we'll give you that target. Now, that is just it's just maths. You don't have to stick to it. You can go higher, you can go lower, you can throw it out the window. It's entirely up to you. But we do that maths to help you understand your goal. And then we incentivize you to achieve your goal because we want you to get to full ownership. And the way we do that is we give you a rental discount whenever you're sticking to that target. So in the example I gave, let's take a really simple example, £100,000 property where you've contributed 50K, we've contributed 50K, so we're 50-50 partners. And instead of paying £1,000 base rent on that property, your rent will be £500 because you're only paying rent on our 50% share. Now, we say to you, you can just pay £500 per month if you like, no problem. That's just the fair rent to pay just to rent this property. But if you pay a little bit extra, let's call it £600, that will help you achieve your goal. And that will get you to your full home ownership goal within 20, 30 years, whatever the time frame you've set. Now, to incentivize you, whenever you pay £600, instead of charging you the normal £500 rent on our share, we're going to give you a rental discount. And that rental discount, typically it's at least 5 to 10%. It can sometimes be higher. It varies by property, by location. And it can sometimes be as high as 20 to 30% at the top end. So let's say we tell you whenever you pay £600, instead of charging you 500 of that as rent, we're going to knock 30% off and only charge you 350 of that as rent. And that means the remaining 250 goes towards equity purchase. And that's your incentive to hit your target, meet your goal, and get to full home ownership within your time frame. And as I say, you've got the complete flexibility to go above or below that anytime you like, literally from month to month, which makes our product, I believe, one of the most flexible products on the market. And it gives you choice, it gives you power. And you can go into the app and you can see the impact of that as well. You can do what we call what if analysis. What if I buy additional equity this month? I've saved up £10,000. What if I buy £10,000 of equity this month? What does that look like? What does it do to my term? What does it do to my monthlies? What does it do to my total cost savings? Do I like this outcome? Yes or no? And again, you don't get this with a mortgage. Comparing to a mortgage, let's say any high street bank mortgage, if your monthly payment is £1,000, you have to pay £1,000 every month, and you have very little flexibility to go above that. And if you want, let's say you get promoted and you want to start paying £1,200, you can't. And if you save up £10,000 and you want to pay off £10,000, you get charged an early repayment fee. And if you want to change your payments, what you have to do, you have to actually go and apply for a brand new product. So you have to go through the time, the headache, the cost of applying for a brand new mortgage product. Whereas with our product, because there is no debt, no obligation, you have absolute freedom from month to month to choose how much equity you want to purchase, no penalties whatsoever. And that's what makes our product so flexible and so fair in times of life's ups and downs. We also go the extra mile. Even though the landlord will sell you the property at whatever the market price of the property is, we sell it to you at the original cost. So we let you keep all of the upside in the property. That is our policy. And the reason we do that is because our mission at Pfida is to increase home ownership and wealth, particularly amongst Muslims. And so we make our money off of the rental income that we charge. That's how we make our money. That's our business model. So as long as you're buying equity from us, our policy is to sell it to you at the original cost. The only exception to that is if you exit the partnership. So if you decide to sell the property in order to make a profit, at that point, because we're partners, we have taken risk in the property with you. We are your partner alongside you. At that point, you take your share of any profit, we take our share of any profit. And again, the exception to that is if you're selling the property because you want to upsize, your family's growing, you need a bigger property, we want to facilitate that. So in that situation, we say, right, you take all of your share of profit. We're only going to take half of our share of profit on sale. We'll gift half of our share to you to facilitate you upsizing the property. So we try and be as generous as we can to our customers, whilst also trying to be fair to ourselves. And what do I mean by being genuine partners in this? The acid test of a partnership is the risk-taking. This is what Sheikh Salman talked about earlier. If the property is destroyed, damaged, beyond repair, there's no insurance recoverable, there's a loss on it. When you have a mortgage product, whether it be a conventional mortgage or an Islamic bank mortgage, you have full risk. If the property is destroyed, you still owe all of that money to the bank, whether it be a conventional bank or an Islamic bank. In a partnership, just like if me and Sheikh Salman own a car together, we 50-50 owners of that car. If that car is destroyed, I can't say to Sheikh Salman, right, you must now buy my share of the car off of me. Because Sheikh Salman will say, what car? The car's been destroyed. There is no car. I don't want to buy a non-existent car from you. And that is the true asset test of a partnership. So we take genuine risk in the property. If there's a loss, we share that loss with you, shoulder to shoulder as your partner. And in return for taking that risk, it's fair that we also get our share of upside in the property. But despite that, we gift that to you throughout the course of the agreement. The only time we take our share of upside is if you sell the property and exit the partnership. We also have a notion of an equity buffer, which is, again, a very unique feature to our product. This is where, in times of difficulty, let's say you can't even afford to pay your rent, they'll protect you, you've lost your job, you're down on your knees. What will the bank do? If you can't make your full £1,000 payment on the nose, the bank will say, right, you're in default. They give you a couple of months payment holiday to make good on the shortfall. They'll charge you interest on the shortfall in between. And very quickly, if you're unable to make good on it, they will come while you're down on your knees and take your home away from you, which we think is abhorrent. We think that should be criminal. With the Pfida model, if you can't afford to pay your full target monthly payment, well, you've got huge breathing room. You can scale down to just paying your rent only. So you've got huge breathing room. Now, if you can't afford to pay your rent, you've got tangible equity in your home. So this is, you actually get share certificates at the moment, share certificates showing how much ownership you have. And you can actually sell some of the equity back to us to cover the rent that you owe. And we call this your equity buffer. And it's, again, very unique to our model. And it presents huge security in times of difficulty. So whereas a bank may give you 2 months to make good on your payment shortfall, with the Pfida model, an average customer who has 10% equity in their home, if they lose their job and they can't make their payments, for our average customer, that 10% equity will last on average 2 to 4 years. So that's 2 to 4 years of security when you're down on your knees going through the hardest time of your life, so that instead of thinking, God, how am I going to pay the mortgage? You can focus on what's important. You know you've got the security of the roof above your head. You can fall back in your equity buffer, and you can focus on what's important, getting back on your feet, finding another job, and starting to make payments again. And this is how we take the spirit of the Shariah into consideration with our model. Really, the spirit of the Shariah is to create ease for our customers in times of hardship, as opposed to coming and making life even more difficult. So I hope that explains the product. I wanted to spend a bit of time on that because that is obviously the key feature. But in the interest of making up for time, we're now going to speed through some of the other slides. So a quick comparison to other finance products. Unlike a mortgage, our product is completely debt-free. There is no obligation to buy a share from us if you don't wish to. There is true risk sharing and a true partnership. If there's a loss on the property, we share that loss with you shoulder to shoulder. Whereas on the upside, as the property appreciates in value, we gift our share of upside to you, because that is part of our mission to increase wealth for Muslims. We share in costs with you. So as there are maintenance costs in the property, as a partner in the property, it's incumbent upon us to share our share of costs. Now, what do I mean by this? Minor maintenance is your responsibility because you are the person living in the property day in and day out. Major maintenance, if the boiler breaks down, if the roof needs repair, it's incumbent upon us as your partner to share in those costs. How do we do that? 2 ways. One is through the rental discounts that we're offering every month. You can think of that a bit like a service fee that we're paying you to cover our share of costs as they arise. And 2 is by gifting our share of upside in the property value as well. We gift all of that upside to you. And so through those 2 mechanisms, we cover our share of costs, and anything left over is our gift to you. And in the vast majority of cases, we expect that to more than cover our share of costs. Our tech does also track that. If there were to come an instance where the various discounts we've given you have not been sufficient to cover major maintenance costs, then it would be incumbent upon us to share in those costs as well. Our product offers an equity buffer, as I mentioned, which is very unique to our product and is there really designed to create ease in times of hardship. And our product comes with enormous flexibility where you can literally choose what you want to pay month to month from our web app. Comparing to renting, with the Pfida product, you get onto the property ladder, unlike when renting from a landlord. You can also choose your own property. So when you're renting, normally you have to rent whatever property the landlord has available. Whereas with us, you get to go and choose your property. You can check our FAQ section for the various parameters that we have, what types of properties we accept and don't accept. You get to keep your share of profit in the property as the property increases in value, whereas with a landlord, they would keep all the profit. And in fact, we even give you our share of profit as well during the agreement. You have security of tenure. When you're renting from a landlord, usually you have your 1-year tenancy agreement, and every year you have to renegotiate your lease or your rental agreement. Whereas with us, we generally grant you security of tenure. Right now, you have a 20-year lease. And if that lease expires and you want to renew it, our policy is to always renew it as well. And I'm going to get to the new co-ownership product in just a minute, where there's not even a lease. You can redecorate, you can keep a pet, all of the things which a landlord may not allow. So huge benefits compared to other mortgage products. We are not a mortgage, just to be clear. Huge benefits when compared to renting. Very briefly, the customer journey. It's actually, I'm not going to spend too much time on this because it's actually not too dissimilar from a mortgage product. So even though the product is very different, customer journey is not too dissimilar. We give you your decision in principle, just like you'd get with a mortgage. That's your certificate telling you what your property budget is. Then when you go house hunting, you put an offer in on a property, the agent will ask you for a decision in principle certificate, so they know that you've got funding in principle lined up. You get your offer accepted, you come back to us, you do your full property application. This is where you provide all the supporting information. Assuming all of that checks out, we go to the conveyancing process. We then purchase the property as partners. You then begin the partnership agreement with us, where you then pay rent on our share month to month. You can either stick to your target payment, which is where you get that rental discount. That's your incentive to stick to your target payment, or literally month to month, you can choose to go higher or lower than that. It's entirely flexible. And once you get to 100% ownership, that property is now completely yours. and we exit the partnership, and we now have nothing to do with that property. It's now yours to do it as you wish at that point. So a very similar process to a mortgage, even though the product itself is very different to a mortgage. Now, one of the issues we find with our current product, which is called our home provision scheme, is the process takes longer. And the reason for that is because there's two sets of solicitors. So there's one solicitor representing you and one solicitor representing us. And as a result of that, the solicitors have to send lots of information to each other, and they have to duplicate lots of work, and it ends up taking longer. And so what we find is the process at the moment does take longer than other mortgage products on the market. The good news is we're now launching our new Owntogether product, which is based on a co-ownership structure. The mechanics of the product are identical, right? Everything I've explained to you, absolutely identical. The only difference is a very slight tweak in legal structuring, and it has, through that very slight tweak, major benefits for you. Firstly, it's a much faster process because we now only need one solicitor, which can represent both of us. And as a result, we have a panel of solicitors who are well versed with our product, and they can get the process done quicker as well. So there's no toing and froing. It's a much, much quicker process. With the co-ownership product, you actually get your name on title from day one. Whereas with the previous product, your name would be, you'd have a beneficial right through a sort of special purpose vehicle that owns the property. Whereas with this new product, and by the way, this is the product anyone completing with us going forward will complete under this new product, which has various advantages. So you get your name on the title deed from day one. And what that means is there's no lease either. So with our existing product, we had a lease. The lease maximum term was 20 years, and then you would need to renew it after that. Here, there's no lease anymore, so there's nothing to worry about with the lease. As a result of there not being a lease, there's stamp duty advantages. So previously there was a stamp duty payable on the lease, whereas when there's no lease, there's no stamp duty on the lease. We expect there to be, inshallah, other stamp duty advantages compared to our current product, but we are still getting the tax advice on that. So we can't go into too much detail on that just yet, but we are hoping and expecting there to be a better stamp duty treatment compared to our current product as well. So not just on the lease, but potentially on the main product. But don't quote us on that yet until we've got the final advice. Because there's only one set of solicitors, there's lower legal fees. I've mentioned there's no lease agreement, and it remains fully Shariah compliant. So a much more beneficial structure, inshallah, which we hope will have various advantages for our customers, as well as, very crucially importantly, trimming down that processing time. And that's one of the things we found was most frustrating in our process. The fact that the two sets of solicitors made things take a lot longer than normal. Inshallah, with this new structure, we are fixing that. So this product is, inshallah, launching imminently. As I say, any completions going forwards will be under this new structure.
Yeah, just on that point, I think it's really important to highlight, and Raza has already done this, but I'll reiterate that our existing product currently enables you to have indirect ownership in your property through share certificates, which are contractual rights. This new product will give you actual legal title. So your name will be on the title deeds of that property from day one. And that's a really important advancement and improvement in the product, because it gives you reassurance. Your name is on the title. You are an owner of that specific property.
Yeah. And this is something, this is part of our mission. Launching this new product, it's part of our mission because it benefits you guys. Now, from our perspective, our existing product was doing very well, alhamdulillah. But we wanted to launch a product. We want to continuously work towards better. And we know that the process was taking too long under the existing product. We want to continuously strive for better and better, inshallah. And we feel that this product is actually better for you as well as better for us. It's also important to note that we do fund homes in Scotland as well, actually all over mainland UK, so England, Scotland, Wales. And that's despite Scotland having a completely separate legal structure, legal system. Now, Pfida is the only Islamic provider operating in Scotland, to the best of our knowledge. None of the main Islamic banks operate in Scotland. None of the other providers, to the best of our knowledge, operate in Scotland. And again, why did we go and create a whole new set of agreements under a brand, completely separate legal structure, costing us time and money? Why? Because that is our mission. We are here, inshallah, trying to seek Allah's reward, trying to say, Ya Allah, we tried to do something beneficial for our community. And so we are willing to spend that time and effort and cost to try and support our community. Now, we're not perfect. We're far from perfect. We are still growing. We're not as big as the big banks. And we have to be very honest, we can't offer a slicker service as the big banks. And that's something you have to accept if you are interested in buying a home with Pfida. You do require a bit more patience because we aren't able to offer quite a slicker service, even though inshallah we're on that journey and we're constantly improving and constantly to make it better and better. So that's just something to be aware of as well. Don't expect to get a HSBC level of service because we're just not there yet. We are small. We try our absolute best. We bend over backwards to try and look after our customers within the constraints that we have, being not quite as big as those other providers. Okay, so that is everything to do with our home buying structure. I can see loads and loads of questions flying in on the Q&A. Please keep those coming. Our team will be continue answering those in the background, and we will leave plenty of time to answer those live as well, inshallah. What we're now going to do is move over to the, this was meant to be where we were breaking for Maghrib. Apologies, we joined a bit late. This QR code, just I've mentioned it a couple of times. If you are interested in learning more, if you scan the QR code, it will take you to log into the app dashboard. If you haven't got a login yet, you can just register from that point. What it will do is ask you what type of investor you are. And if you are an eligible investor, it will take you through that journey. If you're eligible, you can then see our full range of products. And the reason that's important, we're going to cover in the next section, inshallah, where we talk about the fact that we have savings and investment products, but also crucially, where we talk about our investment window. And there are benefits associated with the home buying product for participating in some of those products as well. Again, you have to make sure you pass the eligibility criteria. Over to you, Sheikh Salman, to take us through.
Okay, halal investment. So the question in your mind might be, well, we're a home finance provider, and why are we talking about investments? And that's a really important question. So if you think about a bank, what does a bank do? A bank provides savings accounts, current account savings accounts. It effectively borrows money from us. So many of us don't realize that when you open a bank account, whether it's a current account or a savings account, the contract between you and the bank is a loan. You're lending your money to the bank. And by doing that, you're actually enabling the bank to take your money and lend that out to other people and charge interest. In fact, banks also multiply the amount of money. So for each pound that you give to the bank as a loan, the bank will multiply that, and the system as a whole will actually multiply that sometimes hundreds of times, and really inflate the supply of money in the economy, which is inflationary, which actually detriments everybody. So the banking system as a whole is called the fractional reserve banking system. The banking system as a whole actually creates a lot of money. And the Bank of England on its website actually says this: do banks create money? The answer is yes, they do. Banks do create money. This is admitted by the Bank of England. The banks provide savings accounts. They aggregate money from you and me. And they borrow money from us. And then they just lend that money back to us. And they charge a difference in between. And that's how banks operate. They're called financial intermediators. They don't actually use their own money. They use our money to lend back to us, right? And they do that on a debt basis, which means that if they're charging for that, or we're charging them for that. So when the bank gives you interest or a profit rate on your deposit in the bank, that's you actually effectively charging them interest. You may decide not to take it. As a Muslim, we don't take that. But if there's a loan arrangement between you and the bank, you're effectively charging them interest, whatever it's called. And then the bank then lends that on and charges interest for the loan. And it's a difference between those two interest rates, that margin they call it, that is the bank's profit, and that's how they operate. Now, at Pfida, what we wanted to do was create a non-debt-based alternative to that system. And so in order to finance the properties that we finance for you, we also need the capital. And now many Islamic financial institutions, they'll go out and get that capital from the money markets, from borrowing from other banks, they'll get a credit line. And so their funding source is not necessarily Sharia compliant, although their product is certified as Sharia compliant. We wanted to create an ecosystem that's authentic and Sharia compliant and Sharia based from top to bottom. So we needed a halal source of finance. And what we thought is, actually, why don't we set up our own investment accounts? So these are not bank deposit accounts. We're not borrowing money. They're not deposits. But if we set up an investment system, then that enables us to fund the properties that we finance to you. So we're effectively doing the same thing. The community is clubbing together and funding the properties for other members of the community. It's like a cooperative model.
And it's a way of circulating wealth within the community as well. That wealth propagates and lifts up everybody.
Exactly. And so, there's a verse in the Quran where Allah says, وَتَعَاوَنُوا عَلَى الْبِرِّ وَالتَّقْوَى. Cooperate together upon piety and God consciousness. And this is a very, very wide imperative. This applies to every walk of life, including finance. So where we're cooperating with each other, where those people who've saved up more and are ready to buy, they can buy, because those people who are in the process of still saving, they're allowing their savings to be used to buy the properties of those people who are ready, and eventually their turn will come around at some point, and so it circulates, and so there's a sort of circular economy, and Pfida is based on that concept of circular economy. We are an alternative to, we would say, the banking system, and it's our responsibility as a community to not just have one Pfida, but many Pfidas. Pfida means benefit, and so if there's lots and lots of other institutions like Pfida who replicate the model of a non-banking financial institution, we like to encourage it. When people come to us and say, how can we copy you? We love what you're doing, but we want to set up our own. We say, fine, here's the know-how, we'll help you do it. You see, so we're not here to monopolize the Sharia or monopolize the know-how. We're here to actually benefit society. And other people can take some of that weight off of our shoulders.
In fact, just today, I had somebody from Ireland come and visit us in our London office, saying we want to set up something similar. And I said, sure, I'll help you, anything you need, let me know. And I had to sit down with him. Towards the end, he said, you know, I just need help building out the tech, something similar to what you've got. I said, why do you need to build it? We've built it. You know, we'll support you. We've got the tech, do it. We're not operating in Ireland, but there are Muslims in Ireland who need such a system. So don't worry about that. And this is, again, part of our ethos. If Pfida is the only provider offering this service in 5 years' time, it doesn't matter how big Pfida might be at that point, we have failed miserably. Because this isn't about Pfida just trying to take over the market. We couldn't if we tried, frankly speaking. The market is too big. This is about sparking that change and inviting many providers to come and offer this true partnership-based, equitable-based finance across the globe, inshallah.
That's right. And so it's for that reason that we also provide investment savings products. Now, what I'm going to do is speak a little bit about the principles of halal investment savings.
Just before we get into that, I can see there's absolutely loads of you online with us. Thank you so much for sticking through with us. Thank you so much for joining us. I know we had the difficulties at the beginning. MashaAllah, alhamdulillah, we had over 700 of you register for this webinar tonight, and I can just see that ticker going up and up and up continuously. Thank you so much. It's a live stream, so if you have joined late, I can see there's still loads of you joining. If you have joined late, you can rewind and you can see any bits that you've missed. And at the end, we'll have our Q&A session as well. So over to you, Sheikh Salman.
Yes, so just as I spoke about the principles that underline an Islamic home finance product, I'm going to explain some of the key principles, and they're actually quite similar. So some of those principles mirror in the field of investments, because if you think about it, when you buy a house, that's actually a type of investment. And so when someone finances your house, they're actually investing, co-investing with you in that house, so that the same or similar principles will apply. But here we're talking about what happens if you've got a bit of dormant money, right? You've got some money sitting in the bank account. It's not doing much for you. You're dissatisfied with even the concept of leaving it in the bank account. So as I said earlier, when you leave your money in the bank account, it's not doing anything for you, not doing anything for anyone else. It's not activated. You're actually lending money to the bank and enabling the bank to potentially do non-Sharia compliant activities with your money. And so you might want to consider now diversifying and looking at what other investment options there are. So what Sharia principles should you be armed with and look out for when you're looking at what your options are? The first thing I would say is this principle of daman. Remember that hadith at the beginning? I said al-kharaju bil daman, that the return you get from something is linked or commensurate to the risk that you take in the underlying asset or the activity. Now, the opposite is also true. If you're not taking any risk, suppose you're just lending somebody money. Suppose somebody's giving you a fixed income type bond that you effectively lend them money. They will use your money for whatever activity, but they have an obligation to return your money with a profit regardless of what happens in the underlying activity. You've effectively lent them that money, and that can be structured in lots of different complex structured ways, but effectively you've lent them the money. They are giving you what's called a daman, a guarantee that your capital will be returned. If that's the case, then the Sharia says, because that's effectively like a loan, you're not really allowed to take anything on top. And that's why we don't take anything on top of the capital we put in a bank deposit. So even if they're paying us interest, you might have it in a savings account that pays quite a high rate of interest. Many of you will be purifying your wealth in the bank account and ensuring that the interest is paid off to charity, because it's something you can't keep, right? Many scholars actually say even in an Islamic bank account, because it's a deposit, in legal terms, it's still a loan from you to the bank, that any profit that you gain from that is also potentially questionable because of the existence of that daman. So that's something just to bear in mind, and just to look out for in any investment product. Is there a genuine risk that you're taking that's entitling you to the reward that you get? The other thing you need to look into is, what is the provider doing with my money? That's very important, because sometimes we'll give our money to a provider and there's very little information or transparency as to what is going on underneath. And as we said with Pfida, what we've done is we've created a very transparent ecosystem. So those who open up a savings account with us, they know very well that that money is ring-fenced, and that's only applied towards buying property, which is then rented out to our customers. And then the rental income from that is what generates the return. So our account holders get a share of that return. That's the Sharia structure. I'm focusing on the Sharia structure here, just so that you're armed with education and information to understand what that is and have transparency. So what I would suggest is, whether it's us or anyone else, look at how transparent the provider is, and do you know really what's going on underneath? Are you able to see, is my money being used for something actually Sharia compliant, or is it being mixed with some other sort of contamination? You call it contamination in the industry. The third point I'd say is, and this is actually really, really important, because you see, the wealth that Allah has given us is actually not ours. It's a trust, it's an amana. And so really, Allah is going to ask us what we did with that money. And have we benefited others with that? Because Allah constantly benefits His creation. One of His name is An-Nafi', the benefactor. And so Allah loves it when we reflect His attribute of nafa', of beneficence, of giving people benefit. And so every walk of life, every opportunity we have, we should be looking at, how do I benefit this person? How do I leave this person in a better state? How do I benefit society with whatever activity or intervention I make? And so if we've got money, then that's a tremendous opportunity and responsibility to try and benefit society, not just earn a return for ourselves. That's fine, there's nothing wrong with that. But then looking at the underlying activity, is, for example, my money helping someone to get into a home and avoid debt and riba? And if I can do that and also earn a return from that, then I've got both a financial return and a moral return. And so in Sharia terms, we call in Arabic and in fiqh, we call this when something is halal and tayyib. So it's compliant technically with the principles of halal, but it's also tayyib. It's good and it benefits society. So that's the principle of halal and tayyib. So we pride ourselves that we've thought about all of these things in the DNA of what we do. It's not just a matter of, hey, this is our commercial practice, and then as an afterthought, let's think a little bit about the Sharia compliance. It's not like that. So we don't see Sharia compliance as a hurdle, as a tick box, as a cost that we have to bear in order to market a product. That's not the approach we take. We've actually built from ground up. It's in the DNA. And that's why if you look at the features of our product, Raza described those earlier, there's benefit in every single feature. We've sat down in our boardrooms for hours and hours and hours thinking, how can we make this product as beneficial to society as possible, as beneficial to the customer as possible, not just compliant with the Sharia principles, but Sharia based in terms of benefit, because the overarching objective of the Sharia is benefit. It's the benefit of mankind. Now, I'd like to speak about one specific type of contract. This is perhaps the most blessed contract in the whole wide world. And this was actually the contract between our Blessed Mother Khadija radiallahu anha and our Rasul sallallahu alayhi wasallam, when she appointed him as her mudarib. So she was a wealthy woman, a widow, and she had appointed various investment managers who had depleted her capital. She was losing money, let alone not making profit. She was actually losing money over the years. And so she was looking for an honest merchant who could take her money, trade with it in Syria, trade with it outside of Mecca, and bring her back not just a capital, but bring her back some profit. And so she appointed Muhammad sallallahu alayhi wasallam as her mudarib, as her investment manager. And mashallah, because of his honesty, one of the things about his honesty was transparency. Where other people, if they were selling dates and they had some good quality dates and bad quality dates, they put the bad quality dates underneath and cover them up with the good quality dates, so that when people took them home, they'd open it up and realize, actually, I've been duped. Whereas what he sallallahu alaihi wasallam used to do he'd put the good quality dates on one side with a price, the less good quality dates on another side with a different price, and you can choose. So you're armed with transparency and the information you need to make a decision. Do I want this or do I want that? Do I want to pay this price for better quality? Do I want to pay low price for lower quality? This is Islamic principle. But this contract is so blessed because it embodies all the principles that I just talked about. Because what it does is it aligns the interest of the person who has the money, the capital provider, and the person who's the entrepreneur, who's going to take that money and then deploy it. For example, in our case, what we do as Mudarib, we take the money from our investment accounts and we buy property with it. And then we manage that property in partnership with our customers. And our customers live in that property. They pay us rent and we share that rent out in a ratio between us as investment manager and our account holders, as in Arabic we call it Rabbul Mal, capital providers. And so I just wanted to highlight this contract because in vast swathes, in a large part of the Islamic finance industry, you don't get contracts of partnership like this. Many of those products in the mainstream Islamic sort of finance or Islamic banking world are debt-based. So although they might start off with a mudaraba contract or a musharaka, which is another type of partnership, or a wakala, which is a type of investment agency contract, they might start off with those contracts, but they will tweak the contracts in legal terms to actually create a debt. And that's really what resulted in me leaving that practice, because I was very dissatisfied and I didn't think that I'd studied Sharia in order to help people avoid or circumvent the Sharia, get around the Sharia principles. I studied Sharia to help people implement and actually apply the Sharia. And that's really why when Raza proposed to me, would you like to join me on the Pfida journey? I was so excited. And I'm so excited to speak about the fact that we've demonstrated it's possible. We're still small, but we have proven concept. We've proven concept. What we really need now is the thousands of members of the community who've come together to support Pfida and are members of Pfida, members of our sort of community who are our customers in various different ways, whether it's on the investment side or the home buying side or both, because many of our customers actually start off by using our accounts to save up for their deposits. What we really want to do is create a tribal mentality. And Raza, you're great at speaking about the tribal system that we've created.
Yeah, I mean, the way our savings product works is really a big community pot or a committee structure, if you like, which is again from the prophetic tradition. This is exactly how they used to pool money together when they were going on the long caravan journeys to Syria. Everybody used to pool money together. Whoever needed to call on that money could then call on that money. And that's exactly what we've done with our savings products. As Sheikh Salman mentioned, it's a very transparent system. The money is pooled together for one purpose and one purpose only, to help Muslims to buy homes. Actually, it can be anyone from any background, but primarily Muslims at the moment, to buy homes free from debt and free from riba. And really, what we try to encourage at Pfida is, rather than thinking about, right, what can I get from this? How quickly can I buy my home? What's the best rate I can get? What we really need to do is come together as one big tribe, one big community, and say, how can we all support each other? How can we all uplift each other? And how can we all live together with each other? And that's what we've tried to create with our big committee pot structure that we've created, this sort of our answer to the banking system, our alternative to the banking system.
And we found tremendous success in this. And we're an example of how actually selflessness and altruism benefits everybody. And it doesn't mean you have to give up on your financial return. There is financial return, but actually it's the moral return that drives people, and the financial return is the secondary incentive. And when you make that your motto, I mean, there's actually a hadith of, it's called a hadith Qudsi, which is a hadith in which Allah speaks himself. And I'm not going to say the whole thing, but there's a part of it which says that whoever makes the akhirah, whoever makes Allah their objective, then Allah instructs the world, the dunya, the wealth, the assets, to serve them, to come to them willingly or unwillingly. And so that's what we find. Let's move on. A very, very, very quick point on the zakat treatment of our savings products. Again, this is educational. This is a Sharia point. The principles of zakat are very, very simple. At a very high level, I'm not going to go into the technical detail. At a high level, if you have dormant money, the Sharia says that because you've not spent it, you've not utilized it, you've not activated it, at the end of the year, you pay a demarage or a cost of carry into the next year of your savings of 2.5%, which goes to the very poor, and that kickstarts the economy because they have a higher propensity to spend that money and consume, right? So it's like a way of distributing dormant wealth back and activating it back into society. That's the sort of general philosophy or principle of zakat. Now, if you take that money and you don't leave it dormant, you buy it for your own use. So you buy a house in which you live, you buy a car which you drive, then you don't pay zakat on that because you're activating it for your use. So those are the two opposites. Now, in between, there's another scenario where you buy, for example, a house, but you don't live in it yourself. You rent it to another person. Again, you're activating that because you're giving someone else a roof over their head. You're giving them the ability to sort of provide for their family, provide shelter for their family. You're giving yourself a rental income. So there's an income to you, there's a benefit to you, and the Sharia wants to promote benefit to everybody. And so because now you've activated your wealth, you've provided a home to another person, you benefited yourself from the rental income, you're also going to pay zakat on the savings you make from that rental income. So that's also another type of activation. The Sharia says you don't pay zakat on the capital value, on the price you paid for that house. So if you paid £300,000, £400,000, £500,000 for the price of that house, you don't pay 2.5%. That's very logical because imagine you have a house and that's your income. You live off of that income. If you had to pay 2.5% of the capital of that house and you don't have any other money, you'd have to sell that house. You'd have to sell the tool of your trade. You'd have to sell the house that gives you the income in order to pay the zakat. And the purpose of the Sharia is not to dispossess people of the sources of their income. And so because the properties that we buy, we rent them out straight away to our customers. So therefore, people who invest in our investment savings accounts, their investment savings account are zakat exempt. Now, of course, you're welcome to pay the zakat if you want to, but at the same time, if you're saving up for a deposit, for example, in your house, many people are saving up for many years to buy a house. And sometimes it can feel unreachable. If you leave that money in a bank account, you'd have to pay 2.5% zakat on that. Over 4 years, you're losing 10% of your deposit. So we've created an opportunity here where you can save, you can benefit another person, avoid riba and interest, be in a Sharia compliant home.
Activate your wealth.
Activate your wealth.
Circulate it.
And also grow your own deposit by getting a return on that. And because it's zakat exempt, that gives you a fighting chance to actually save up enough. And then
to open up the floor for Q&A, inshallah. So we're going to start going through the Q&A feature, starting with, sorry, it's just loading on my screen here. So we are going to start from, let's start from the most upvoted questions. Okay. Could you clarify the waiting times for Pfida's home finance service? What is the required amount in the pot for you to consider? Fully support the mission, but it's not transparent enough what the waiting times are. Fair enough, especially given recent frustrations people have talked about in their reviews. Fair enough. Concern is that more people are being onboarded. Right. If the wait is closer to 10 years than 5, and with a 1% return on investment, the money depreciates. Thank you so much for that question. No questions are off limits here. That's exactly what this session is for. So we want to address any concerns you may have. We want to answer your questions completely transparently. So the public waiting list is very, very long. This is the waiting list which you can just go on our website, sign up and join without doing anything else. Anyone is welcome to join that. That is a very, very long waiting list. And we estimate about 5 years on that waiting list. Whereas we have a separate waiting list for people who invest, especially during the investment window, who open a savings product with us. Again, we can't go into the specific details for regulatory reasons. We can only talk about the specific details once you've done your investor declaration, but we do have a separate waiting list for people who open an investment savings account with us, particularly an account called GYS Home. GYS stands for Grow Your Savings. GYS Home is growing your savings towards a home buying product with us. So for those people, if you look at our Q&A section on our website, so you go to the help section, that takes you to the FAQ section, and you can type in waiting times. And in there is a table that sets out your expected waiting times based on how much you've got saved up within a savings product with us. And those waiting times there are our best estimates. They're based on several years of data, several years of doing what we do. Most of our customers generally get served within those waiting times. Sometimes there may be plus or minus 1 or 2 months, but certainly not years. And in many cases, we've also been able to serve customers on that separate waiting list ahead of time as well. So if you are interested in that, you can check out the help section. Again, you will need to go through the investor declaration because it's talking about the investment product. It's talking about the features of the investment product. So for regulatory reasons, it's very important that you complete that declaration first, and then you can check out the waiting times based on opening a savings account with us, inshallah. How is the rent determined, especially in London? Really good question. So the way we determine rent, so first of all, we don't peg to interest rates. The way we determine rent is we set your rent 1 year at a time. At the end of each year, there's a rent review, and I'm going to cover both of those very quickly. So the way we set the rent is we look at the local rental market for your property. So we look at the local property market, and we try and come up with a range, a reasonable range of rental values for that property in that area. And then our mission is to try and fit within that range. But we also then have to marry up with what we have to reasonably charge as a business to make money, because we have to make money. And so we try and look at what we have to charge to make money. If that fits within that rental range, fantastic. We're in a really good place. It may be sometimes we actually end up at the bottom of that range, and in many cases we do. We don't charge any more than we need to because we have a target margin that we need to make as a business to be viable, and that's what we target. So in many cases we can charge towards the bottom of the range, in some cases towards the middle, in some cases towards the upper end of the range, and in some situations we may have to even charge even a bit more than that. So we may have to say, right, for this property to make sense for us as a business, the amount we would have to charge may even be slightly higher than the range. We try and avoid that wherever possible. But then we have that conversation with you and we say, if you're happy to pay this much rent, because that's what it would have to be viable for us as a business to enter this partnership, then we can proceed. And again, as I mentioned, we give lots of discounts along the way as well. So we give that monthly rental discount, and we also give, crucially, the biggest discount is the upside in the property value. So as the property appreciates in value, rather than revaluing the property and charging you market price as you're buying shares in the property from us, we sell it to you at the original cost. So even though in very rare situations we may have to charge slightly higher than what a reasonable range is, and again, we try and avoid that. In most cases, we try not to do that, only where that's the only way for us to make money as a business. Even if that is the case, what we would expect in the long run is, as the property appreciates in value, as we're gifting all of that upside to you, we would expect that to more than offset that over time. Okay, so someone's asking about clarity on the waiting list. If you want to understand what your wait time is, the best thing to do is send an email to our team, hello@pfida.com, and just say, what's my current wait time? And the team will respond to you with a current estimated wait time. So we do have estimated wait times in the FAQ section, as I mentioned. You can go and check those out. Those are estimated wait times. But if you want the most up-to-date view of your wait time, you can email hello@pfida.com, and they'll tell you the most up-to-date wait time. Is it possible to refinance a property from a conventional mortgage over to Pfida? Sheikh, do you want to talk about this one?
Yeah, so in principle it is. And we do actually have some customers who have requested to do that. The only challenge is because we're not a bank, we're technically not a financial institution according to the definition of sort of the law in relation to SDLT, which is stamp duty land tax. Because our product is a co-ownership, we require that the property is transferred over or partly transferred over to us, depending on how much finance we will provide. So if we're providing 80% finance or 50% finance, at 50% of the property will have to transfer over to us. That will incur an SDLT charge. And then when that's transferred back to you, that then incurs another SDLT charge. Unfortunately, the law doesn't give non-banking financial institutions like us that exemption. So the law is behind the curve in terms of progress within the Islamic finance industry. And so it can become very costly and inefficient for you to do that. For some people, it works where what's left on their equity is quite small. So if you've got sort of 20% or 10% finance left, because the SDLT charge on that would be small or relatively small, it can make sense for some people. So that's why some people are doing it. But if you're at the beginning of your journey, you've just bought your home in the last 5 years, it's often too inefficient for that to work.
Okay, there's another similar question here. Someone asking about stamp duty, but then also capital gains and tax on rental share as well.
Please confirm if stamp duty is paid once or twice. I love the explanation you give, Raza, on stamp duty. So
yeah, So let me cover the stamp duty point. So people do often say, are you paying stamp duty twice? I really encourage you to think about this product for what it is. It's not a mortgage, right? So try and avoid any knowledge you have on the mortgage, because this is not a mortgage. This is actually much more like buying your property from a landlord. So imagine you are renting a property from a landlord, and you go to your landlord and you say, I'd like to buy your property from you. And your landlord might say, yeah, sure, my property's worth £400,000. Pay me £400,000 and you can buy the property. So you pay £400,000 and you pay your stamp duty on a £400,000 purchase. Now, the landlord may have bought that property 30 years ago for £100,000 and paid, for argument's sake, £5,000 stamp duty at that time. Now it's worth £400,000. So you're covering the initial cost that the landlord paid and his stamp duty and all of the profit appreciation in between. So you're paying £400,000 and paying stamp duty on a £400,000 value property. Now, the way it works with Pfida, it's the exact same situation. You're coming to Pfida and saying, I'd like to buy your property from you. Now, we're saying, sure, the property today is worth £400,000. And when we bought it 20 or 30 years ago, or however long you've been with us, so we're talking at the end of the agreement when it comes to transferring over to you. When we bought it 30 years ago, we bought it for £100,000 and we paid, for argument's sake, £10,000 stamp duty. So even though it's worth £400,000 now, we're selling it to you for £110,000, which is whatever we paid for it, including our stamp duty costs, so that we're not making a loss. But we're selling it to you for the original cost of £110,000. Now, what that means is, rather than paying £400,000, which is today's market price, and then paying stamp duty on a £400,000 purchase, you're paying £110,000, which is the price from 20 or 30 years ago when we purchased it, and you're paying stamp duty on a £110,000 purchase. And so rather than thinking of it as two lots of stamp duty, you need to appreciate that it's actually, you're just buying a property from a landlord, but instead of paying two lots of stamp duty, what you're actually getting in this example is a £290,000 discount on the value of the property. So we're selling the property to you at the price from 30 years ago. So even though we're baking in the stamp duty we paid originally when we bought the property, despite that, because you expect the property value to have increased substantially over the next 20 to 30 years, actually you're making a massive saving overall. And that's the way to think about it. It's not a mortgage, and so it doesn't make sense to compare it to a mortgage. It's a very, very different structure.
Yeah. So on the second point of capital gains, our policy is to sell our share of the property back to the customer at the acquisition cost. And so we don't actually make any capital gain. So long as the customer buys the property off of us over time, we will not make any capital gain. So there'll be no capital gain to us. The third question is, will Pfida be liable for tax on our rental share? So all the rental income comes in as income for the company, for the special purpose vehicle that owns all the properties or owns shares in those properties. And then at the end of each year, we will, as a company, we will pay corporation tax on the profits after cost of that company, and then distribute a portion of that to our account holders as a share of the rental income. So the company will be subject to corporation tax, not capital gains tax.
Yep. Someone's asking, when you're at the stage to view houses, how long is the process typically? I've heard it can take 7 months, which is obviously very long. Yeah, so I talked about this earlier with our previous product, because there were 2 sets of solicitors, it did take much longer, and it did in some cases take 6 or even 7 months. But with the product going forwards, the Owntogether product, because we're able to go down to 1 solicitor, we're expecting that to go down to something much, much closer to how long a conventional product takes. We don't think we'll be able to do it quite as quick as a conventional product, because there is additional considerations for the Shariah structuring, but it certainly shouldn't be anywhere near 6 or 7 months. We're hoping to at least shave a good 2 to 3 months off of that time frame that was happening before. So it should be a much, much more reasonable time frame, inshallah. Some people have said that our online calculators are different to when you actually buy a house. Can you elaborate, as we are with you on the GYS home scheme at the moment? So the online calculators are pretty accurate. So when you log into your dashboard, you scroll to the bottom, there's calculators there. You can have an affordability calculator, you can have a cost calculator. As long as the figures you're putting in are the same as when you're buying a home with us. Now, of course, if you put in completely different figures, then when you come to buying a home with us and the figures are completely different, then of course the values will be different. But as long as you're putting in the same figures, then we would expect them to be very, very close to what you'd end up actually paying when it comes to buying a home with us. So we do ensure that they're given a fairly accurate view. The one thing to bear in mind is the stamp duty, sorry, the cost calculators. You need to make sure you're putting in the right figure. So you need to put in the acquisition cost of the property. So if you're buying a property for £100,000, the acquisition cost will be the £100,000 plus the stamp duty we pay. That's the acquisition cost. And I believe on our calculators, we have some links to how you calculate stamp duty. So you need to make sure you're putting in the right figures. If you're not putting in the right figures, then obviously you won't get the right figures out either. Okay, this is a good question here. Sheikh, do you want to talk about this?
If we buy the property together, then the stamp duty should be shared between Pfida and the homeowner. Why is this not the case? Only half the SDLT should be added to the price to be paid back as part of the equity. Now, that's a really good question. So as we were structuring our products, we were thinking about how can we structure it in the way that's best for the customer. That's our starting point. How can we make it as affordable for the customer as possible and create a situation where they're paying as low a cost for their property over time, over 20, 30 years as possible. And so there's two ways we could do it. Either we could do it the way landlords do it. What does a landlord do? A landlord owns a property. A landlord will charge market rent. And within that market rent, they know they bake in their cost.
Oh, right.
Well, a landlord in their rental rate will look at the market rental rate as their starting point, and they will not give you any discount for that. Typically, they'll just charge you the market rental rate. And the landlord's costs are baked into that rate. If it didn't work out for the landlord, they wouldn't buy the property and rent it. The basis is that they buy a property, the rent sustains their cost, plus gives them a bit of profit to make it worthwhile, right? So we could have just charged market rent to our customers, knowing that we'll also have other costs. And that's one way to do it. But what we decided to do is have this rental discount mechanism. So although we price the rent starting at market rate, we have a system where the customer buys equity and sticks to the equity schedule each month, they get that rental discount. And that rental discount effectively brings the pricing down and makes the finance a lot more affordable. And that difference between the market rent and the discount rent is really the buffer or the fat that would have gone towards paying for some of those other costs that the landlord pays, such as SDLT, such as maintenance and so on. So we've not left any of that fat for us. And the reason for that is that makes the product much, much more affordable and more beneficial to the customer on a month-to-month basis. Now, that means that we therefore haven't left a buffer for us to cover some of those other costs. And that's why we ask the customer to cover that up front in order to get that benefit on an ongoing monthly basis for 20 or 30 years.
But also in terms of adding the SDLT to the acquisition cost of the property. So the reason we do that is to make sure we're not making a loss. Because when we buy the property, we pay the price of the property and we pay the stamp duty. Now, when we sell it to you, if we sell it for less than that, we're going to make a loss. Now, any landlord would sell it to you for the market price, which in the example I gave, maybe £400,000. But we're selling it to you for whatever it costs us, which may only be £110,000. So you're buying a £400,000 property for £110,000. And that way we ensure we're not making a loss. So we're selling it to you for whatever we paid, but we're still giving you all of the upside as the property appreciates in value.
Actually, just on the nuance of that question, that is a very good question. So if the customer were to offer to pay half of the SDLT, which they can if they want to, then we'd only put in half of the SDLT that we pay to the acquisition cost. It's only because we pay the full SDLT typically that we add the full amount through the acquisition cost.
Exactly. We only bake in whatever we pay effectively. So if you're paying it, of course, we won't bake it in. Right, just trying to find questions that haven't already been answered by our team in the background. Our team are working hard. Okay, can you please explain in detail how your product is different to other halal mortgage who also call it rent? It's a really, really good question. I'll give a very high level overview and maybe Sheikh Salman, you can add to that. So the key differentiator is in the debt, right? So if there is a debt, then that is what determines whether you're actually paying rent or not. If there is a partnership versus if there's a debt. And again, I go back to the example that I gave right at the start, where I said when you're renting a property from a landlord, you don't need to know anything. You don't need to be a Sharia scholar to know that when you're renting a property from a landlord, that is rent. That's not interest, that is rent. We inherently just know we're paying rent when we're paying rent to our landlord. Whereas when taking out a mortgage and paying interest on the mortgage, without being a Sharia scholar, we inherently know that's interest and that's not rent. And what's the difference? How do we know? The difference is with a landlord, you don't own the property. The landlord owns the property. And therefore the landlord takes all the risk in the property and you don't have debt to the landlord. So because the landlord owns the property, you can rent something that you don't own. You can't rent something that you do own. Whereas when you're paying interest on a mortgage, you own the property and you can't rent something that you already own. So it comes down to ownership. Are you paying for something that you already own? In which case, that's definitely not rent. So what is it? Are you taking all of the risk in the property? Because if you're taking all of the risk in the property, you effectively own it, even if your name isn't on the title. So with some structures, even though your name isn't on the title, all of the risk is on you. If anything happens to that property, it's all your headache to deal with, nobody else's. Now, again, if you're taking all of the risk, you effectively own the property. You can't rent something that you already own. Now, secondly, with other products out there, you may have a debt obligation where, as well as paying rent on something that you already effectively own, you're also required to gradually pay off a specific sum of money over a specific period of time. So that begins to look like a debt, paying money on top of a debt. Whereas when you're renting from a landlord, it's very clear that your rent is your rent. You're just paying rent to live in the property which you don't own, right? And it's very clear that you can approach your landlord anytime, completely independently, and offer to buy that property, or choose not to. That is completely separate, and that is completely valid. And again, inherently, we know this is halal. We know there's nothing wrong with this. And the Pfida product is exactly that. Your only obligation every month is to pay your rent on the share that you don't already own. You can't pay rent on something you already own. So you're only paying rent on the share you don't already own. And you have absolutely no obligation to buy our share from us. There's no debt. There's no fixed sum of money that you must pay over a fixed period of time. You can carry on for as long as you like. Just paying your rent if you like. Whereas with other Islamic structures out there, you must pay rent every month and you must buy equity every month and you must buy a set sum of equity over a set period of time for a set price, which is effectively a debt. So with these other structures...
It's the rent on top of a debt.
It's the rent on top of the debt, which is the issue. So with these other structures, you take all of the risk in the property. So the bank will not share in the risk if anything happens to that property. And you have to pay a debt over a specific period of time, and you have to pay a rent on top of that debt. And that is what differentiates the Pfida model, where there is no debt, there is true risk sharing, and you're only paying rent on what you don't already own. Have I missed anything there?
No, I think you covered it.
Fantastic. Sorry, I stole your
No, that's right. That's right.
Let's see if we can find some other ones that our team haven't already answered. I appreciate we're well over time. We were due to finish by this time, but because we started a bit late and because there's still loads of you online with us, Masha, thank you so much for staying right till the end with us. We're going to go for another 15 minutes, inshallah. We're going to try and end maybe 10 minutes by 8:45 because we did start a bit late. If we haven't answered your questions, you're very, very welcome to send them through to hello@pfida.com. And we'll make sure we get those answered after the webinar. And we will send out the webinar recording as well, inshallah. We'll aim to send that out within the week, inshallah. And again, thank you so much. There's still absolutely loads of you online with us. Thank you so much for staying till the end. And we hope that you're finding it very, very useful, inshallah. What happens at the end with regards to SDLT when the transfer is made to the customer? Okay, we've already discussed this. Why do you have a maximum house value? I think it's 500K last time I checked. Really good question. I'm glad you asked this, actually. And I'm going to answer a couple of other questions which I haven't seen asked, but which we get asked a lot as well. So why is there a maximum house value? So it used to be 500K. Actually, we've now increased it to £750,000 But the maximum funding we provide is £400,000. Now, why is this? First of all, why is there a maximum house value? Why can't we go up to £1 million or £2 million as long as the customer has a big enough down payment? The reason being, unlike a bank, we actually take that property onto our balance sheet. We take risk in that property, shoulder to shoulder with our customer. Now, what we can't afford is to have one property that is massive and outweighs all of the other properties in the portfolio, because one of the things we do for our investors is we spread their money across all of our properties to try and diversify risk for them. Now, if there's one property which is massive in that portfolio, then that creates what's called a high concentration risk. That's what we're trying to avoid. So initially, when we were smaller, the property limit was £500,000 to make sure no one property is creating excess concentration within our portfolio. Now we're a lot bigger, mashallah, so we've increased that to £750,000. Alhamdulillah, and inshallah, over time, we'll increase that further. Why is the maximum funding amount £400,000? Well, again, because our funding predominantly comes from our savings accounts, from our community, from our tribal community, we want to make sure that we're not over-concentrating those funds in any one property. And so that's the reason for it. But inshallah, over time, that property cap will increase. Inshallah, over time, as we ourselves grow, as our portfolio grows, the maximum funding limit will increase as well. I wanted to answer some other questions which I can't see have been asked. Oh, this is a good question. Do you sell shares in Pfida itself, or do funding rounds to invest in your company? Yes, we do. So we've actually just had a round. Inshallah, we're planning most likely to do another round in November time. So if that's something of interest to you, if you want to buy shares in Pfida itself, do look out for that. And again, if you've got a valid investor declaration, then we'll share details of that. If you haven't got a valid declaration, then we won't be able to. So if you want to receive that information, make sure you go and do your investor declaration, inshallah, online using the QR code there on screen. Some of the other questions we sometimes get asked, let me just think. So the biggest one we get asked is around how we set rent. I didn't talk about rent reviews. So we do a rent review once a year. As I mentioned, we don't peg to interest rates. So we set the base rent by looking at the local market and marrying that up with our own business needs. But then once a year, we do a rent review. How does the rent review work? Well, what we do is we look at the local property market again, and we plug into land registry sold property price information. And if property prices are going up, your rent will go up. And if property prices are going down, your rent will actually go down, which most landlords wouldn't do. And we cap the rent review so that you never get a shock in any given year. And we cap it such that your total monthly target payment, which is your rent plus your target level of equity purchase, should never move by more than 1 or 2% in any given year. Why do we calibrate to that 1 or 2% marker? Because that correlates with long-term wage inflation. So what we've done there is we've specifically calibrated our rent reviews. They go up and down in line with the property market, not in line with interest rates. We specifically calibrated them to make sure that your affordability should remain roughly constant over time. So your rent should never move significantly out of kilter with wage inflation. What other questions do we get asked a lot? I can see there's loads of questions, but most of them have been answered by our team. Our team
So the question is, can someone pay early? Can they pay it off early?
Really good question. Yes. So yes, absolutely. Again, I mentioned the flexibility afforded through our web app. You can go into our web app. You can do what we call what-if analysis. I've got £300,000 of equity left to purchase in this home. What if I buy that today? What will it do? How much money will I save? Do I like that outcome? Yes. Okay, great. You can go ahead and do it. You can actually start the agreement today and buy us out tomorrow if you like. No problem at all. The only thing we might request for a very large purchase of equity, we might request a notice period, because if we've got a very large sum of money coming in, we want to make sure we can redeploy that into another property rather than that money sitting idle. So we may ask for a notice period. But apart from that, you are very, very welcome to do that. We pride ourselves on having the most flexible product on the market. The amount you're refinancing for is under 100K. Again, another question about SDLT. We've answered SDLT. Lots of questions on SDLT today.
So on SDLT, you can actually go on to an SDLT calculator. So if you just search, if you Google SDLT calculator, there's loads of them. The government has one as well. You can just plug in your numbers and it will give you what the SDLT will be.
Someone's asking, what's the quickest way to wait the least amount of time to be accepted for a house? So again, you can find out about our separate waiting list. If you're eligible to open a savings account with us, you can check online And then you can find out about the separate waiting list. You can find out about the wait times there. As I mentioned, there is a separate waiting list for that. But also, in regards to the question itself, as I mentioned earlier, I really want to encourage, part of our mission at Pfida is to encourage a community mentality, what we call an ummah mentality, where we really need to get away from asking questions like, how quickly can I be served? What can I get out of this? Yes, that's very important, but we need to move towards being a joined up ummah, where we're saying, how can we all benefit each other? How can we all support each other? And how can we all benefit together? And that is precisely what our savings accounts are there designed to try and do, inshallah. And again, you can find out all of that information by checking out our website, inshallah. And if that is of interest to you and you're eligible for that, the investment window is opening soon. As I've mentioned, you guys are eligible to apply for that early, and you'll get a guaranteed spot in that, inshallah, if you do so. How do we redeem the complimentary IFA session? Great question. So again, I can see it's already been answered, but I'll answer it anyway. So if you scan this QR code, log into your account, complete your investor declaration, it will ask you what type of investor are you. And if you don't fall into any of the categories there, you could say none of the above. For you guys, when you do that, we will then send you an email saying, okay, you don't fall into any of the categories, but we're going to pay for you to have a free IFA session, and then we'll give you details of how to do that. So look out for that email. What do you guys do with the interest from the investment account? So we don't take any interest in any part of our dealings. So our investment account is a savings account where you invest through this mudaraba structure that Sheikh Salman talked about. We use that money to fund homes. The rental income that we generate from those homes, we give you a profit share on that rental income. So there's no interest anywhere in the equation. It's a straight profit share on a genuine rental income. So we don't take any interest anywhere in our dealings. What is the minimum investment for the upcoming window? I can see that's been answered online. Okay, a question asking for clarification on Zakat.
Yeah, so the question is, when we provide finance, there's no Zakat. So I think the question is on, so our investment savings accounts are based on the principle of mudaraba. We take your money and we deploy it into houses. So the principle is, if your money is used to buy a property which is rented out, so it's got rental income, then the principles of Zakat say that you don't have to pay Zakat on the value of that property. So because when we take your money, now there is a timing issue here, actually. That's an interesting question. So suppose you open an account today and somebody puts in 50K. We may not deploy that immediately. It might take us a few days, a week to actually put that into an actual property. So we've got tech which scans our accounts and looks at when money comes in, when it's deployed into a specific property, and we also look at your Zakat date. So on your account, once you've created a user account, you'll be asked to tell us what your Zakat date is. So if your Zakat date, for example, you've given us the money today, your Zakat date is tomorrow, and we haven't deployed that money into a property by tomorrow, we'll notify you that actually you still have to pay Zakat on that 50K tomorrow, because it's still sitting there almost like it's in a bank account. It's when, say, a week later or 2 weeks later or a month later, depending on how quickly we will be deploying in that period, that it's now fully utilized or committed to a property. Our tech will realize that, and it will send you a notification on the Zakat date that your money is fully utilized. There is no Zakat due on your account.
So we're coming up to the hard stop now. We're going to answer 2 last questions, and then we're going to leave it there, inshallah. So someone's asking about the return on the savings account. We have different types of savings accounts. And again, we can't go into too much detail here, but we have a savings account for people who are looking to buy a home with us. And we have other savings accounts for people who aren't looking to buy a home with us. Now, the savings accounts for people who aren't looking to buy a home with us, they just want to put money in and park it and get a return, that offers a slightly higher return. The savings account for people who want to ultimately buy a home with us and get onto that separate waiting list, that offers a slightly lower return. Why is that return lower? Because what that enables is for us to then pass on those savings to our home buyers. So what you do, and again, this is part of that tribal mentality I'm talking about, you accept a lower return while you're waiting for your turn. In return for that, you know that you're helping other people while you're waiting. you're getting your turn a bit quicker, inshallah. But the key thing is you're lowering how much it costs us to raise capital. And that means you accept a slightly lower return while you're waiting. But then when your turn comes, we can give you a discounted rate. And again, that means basically we can pass on the savings to everybody. So if everybody accepts a slightly lower return while they're waiting, maybe it's for a year, maybe it's for 2 years, in return for that, for the next 30 years, you can have a much better rate of funding. So you accept a slightly lower return while you're waiting. In return for that, when you're buying a home, you can have a much better funding rate. And so that's why the return on the account for people looking to buy homes is slightly lower. Someone's asking, if 10 people put in 100K each and all want to buy houses costing 300K, that'll buy 3 houses. Where does the money come for the other houses? Really good question. And that's why we have different types of savings accounts. So we have savings accounts for people who just want to park money with us, get a halal return, and know that that money is being put towards good, know that it's a transparent investment, a halal return. And so the money in that pot is used to fund homes for people who want to buy homes. And that's how we raise more money rather than just the people looking to buy homes. This is exactly how a bank works as well, by the way. So a bank will have money in their savings accounts from people who are looking to buy homes, and they'll also have money in their savings accounts for people who aren't looking to buy homes. When you aggregate all of that money together, that's the money which they use to fund homes for all of the people who do want to buy homes. So we are now at time. Again, apologies, we've run over because we started a bit late due to technical difficulties. I can see actually the vast majority of you stayed with us right until the end. Thank you so very much. I take that as a sign that you found it very useful. Alhamdulillah, thank you very much. Inshallah, you found that useful. Inshallah, we answered a lot of your questions. Inshallah, our team answered a lot of your questions in the background. But again, if there were any questions which we couldn't answer, then please do send those through on hello@pfida.com, and we'll make sure to get those answered as well. So much for staying with us. Inshallah, please do send your questions through via email. And inshallah, we hope you'll join us again for another session soon. And we hope we can help you buy a home with us or help you invest and save with us in a halal way soon. Jazakumullah khairan. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu alaikum.